All right, so let's get started here. We're gonna start with let's start with the market. I was surprised how weak of a bounce we had after pretty much being down 5 days in a row. I mean, the way I'm looking at things right now, I am hoping that we open up flat to up a little bit tomorrow so I can short the SPY via along the SPXS. Right around here. I'm hoping that we open up flat so I can jump on this immediately with a stop right over here. You know, just call it 1990. Just give it some room. But this one, QQQs, again, I'm surprised that we went up. We try to, stay above the 21-day moving average, which is the yellow line right over here. And we just sold it off. The same thing again happened with the SPY. I'm just surprised we're so weak after so many down days. So we can open up flat tomorrow. That's going to be my first go-to. Is going to be the SPXS and the SQQ. SPXS 2086, right? Buy stop 2087. Stop, call it just $20. That's fine. SQQ 46.73, buy stop 46.74, and initial stop, call it 44.60. Now with the inverse ETFs, I normally only go a penny above the buy stop instead of 10 cents, and the reason why is because these inverse ETFs, especially within choppy markets, they decay in value. So so it's like you can't chart these things. You have to chart the underlying instrument, number one. Number two, and indices, they just trade a little bit different than stocks. So I normally just go a penny, right? Once they break that low, it's exactly what I want to see. Or once they break a high, if we're going long. But those two right there, those are my go-to for tomorrow. Again, this is a 30-minute time frame, right? This looks like a good look at it. I mean, just at the end of the day, it's just dumped. And this looks like a good short, right? With a stop right over here, right? What we need tomorrow, instead of having a gap down, hopefully we get just a little small rally that we can sell into once it breaks the low, right? So that's that. Let's go to the watch list, the rolling 5-day watch list, to see what's moving. CF, I think this one triggered right at the open. I didn't take it. Normally these type of stocks, high price stocks at the open, they normally have a very wide spread, which I normally just skip. And then also we have to be aware of what's going on as far as how is the market trading. Are we gapping up? Are we gapping up and just selling off at 945? All these things matter. You can pay attention to the rolling 5-day watch list. Twinkie never triggered. Rita triggered and broke down. AMR, when was this? 12/5. So we had it right over here. I don't think this triggered, and if it did, it was early in the morning. And then this was the day that all the oil stocks took a beating, I believe. And commodity stocks, IMD, I don't think this triggered on the day we had it on the list, which was 12/6. Let's see what else we got. Webull, we got involved right over here, sold it for maybe 4%. FNGU, so some as high as 4 and change. So all these things have pretty much a 1.5 day follow through. Right, and then it pretty much closed at the low. DRN, same thing, very small follow through. TQQ, again, same thing, very small follow through. Amazon, very little follow through. TSLL, this had a decent day, up 5%, not bad. SPXL, again, very little follow through. I'm surprised for those of you who just walked into the room. I'm surprised about the little follow through that we had in the SPY and the QQQs after being down 5 days in a row. And coming into tomorrow, my go-to trades are going to be to short the spine and the QQQs via SPXS and SQQ. My biggest hope, I'm hoping that tomorrow we open flat to slightly up, and then obviously the buy points are going to be above the previous day high. SPXS high is 2086, buy stop 2087, initial stop 20. SQQ buy stop 4674, which is a penny above the previous day high, Friday's highs, and initial stop 4460. But again, this looks extremely weak. These indices, very surprising. Look at look at the 30-minute chart, which I normally don't look at the 30-minute chart. I'm only looking at these things when we are in the bear market. Underneath the 5-day and 21-day moving average, I normally tend to look at the 30-minute chart in the S&P 500. But once I start seeing setups like I did last week for a couple of days, I wasn't even looking at this. Okay. So if you can see here, this would have been a great shorting opportunity right over here. Once it broke 395 with a stop right over here, I'm hoping again that we get a little small rally or just open flat. Just open flat. And then once we go through this slow, we might have some decent downside. Now, so let's go now to the top 400 names. Again, I'm taking the top 250 names of multiple time frames, 3 months, 6 months, year to date, 1 year. And then that gives us 637 stocks. I'm going to narrow down that list by making sure that the price history of prices above $2.50 and that these stocks are trading within 3% of their 20-day moving average, right? So we're trying to look for stocks that are, probably consolidating, right? And since they're the top 250 names within their time frames, we're hoping for something for a stock that has some momentum. It's been trading sideways. So let's take a look to see if we can find anything for tomorrow. And again, if you have any questions to make this a little bit more informative, just ask away, whatever it may be. All right, so Mac, this looks like a buyout, but nothing there for me. You see something just caught my eye, but 122,000 shares. And some of these things that I think might look okay, but just need more time, what I normally do, I'll just flag them, right? BCAB. Nice little move here. Inside day, buy stop is 987, initial stop 930. And we bought this a couple of times already. Most recent right over here, 910 through the previous day high right over here somewhere. Yeah, and shop. Look, this is a nice setup, right? Stock's been trading sideways for months, for roughly 6 months, right? And when you see this type of basis, again, just to reiterate what it is, I like these bases that are near 52-week lows, because what you have here is that you have the sellers in control. The stocks gets to a level where the buyers and sellers find equilibrium, and you start going sideways. Eventually, what happens is that the sellers start. They don't have any more supply. The buyer starts to get more aggressive, and at the very end of the base, what you tend to see is the buyers take over. You see that by seeing higher lows and higher highs, which is what we're seeing right over here. Right, this is exactly what you normally see before this thing breaks out. Looks good. Down multiple days in a row, but it just has a 1-day follow through, right? So that's just the market, but these are the type of these type of basis near lows is what you want to focus on as well. mRNA, right? Here's a situation with some of these. This is a stock that we bought at 176.88, so some as high as 184. We left the piece on with a $12 trailer. Because again, basing for almost 11 months. If you believe in measure moves, the high over here is roughly 184. Down here is 124. That's 60 points. 60 plus 184 equals 244. Right over here somewhere. That's like the measure move target. But it came down, right? And it was down over $12 from wherever it is I put the trailer. So I was stopped out the last piece at 172. Once you start looking at these bases, you're going to start to notice that they respect this 21-day moving average, and that's sometimes the problem with the trailers. That initially, you put a trailer on if you put a trailer just via the ATR, it's just going to follow the stock higher, and you put a trailer, and if the stock goes to 185, and then that $12 no longer is as valid as if you use if I would have used, for example, a close below the 21-day moving average as my stop, that would have been much better, right? Because these bases, if you start going through them, you'll notice that once they start to break out, they respect this 21-day moving average for a while. So next time I'm going to skip the trailer, and I'm going to work on the close below the 21-day moving average. And if you can see here, for example, AAL, this is the 21-day moving average is the yellow line right over here. You can see here how it respected that. Even here, when it broke below it, it bounced back, right? You take a look at AMPY, same thing, just right over here. If you put a generic trailer, chances are you would have been stopped out here. It finally broke, but it kept you in the trade for a while. BTU, similar situation. SEIX, again, similar situation, right up to here. CRM, here's the breakout, kind of like similar situation, but you'll notice that it happens more and more often. All right, so the next time, if you did the trailer, let's forget the trailer and use a stop. I'm sorry, not a stop. A close below the 21-day moving average as your stop. And here, 297,000 shares. Just skip it. Or CUS. And this is NLK setup, right around the highs, but it's just too cookie cut setup for me, where most of the IBD guys are looking at this stock, and then these stocks, they just become so choppy. So I'm gonna skip it. SRPT, 119.65, stop 116. Nothing, just a few stocks, 2 stocks. Let me go through my flag list. Let me go through my flag list. Let me just do this here. ETF's down 3 days in a row or more. For me, when it comes to setups as well, it's important to me how far the buy stop is. If the buy stop is too far, I'm just going to skip it. All right, let's go to the flag list. AXSM. BCAB is on the lens shop, just needs more time. Read, and looks good, but just couldn't go. Netflix was a nice one from last week, Thursday. SOXL, nice one as well. I think when it went up as high as maybe almost 10%. And like I said before, I'm taking these profits a lot quicker than I normally do, and that's because that's what the market is dictating. We're not having these 2 or 3 day follow through, so you got to take those things off the first day, or at least the bulk of it after the first day, because they're just not following through. At some point, that's going to change, and then you have to recognize that change and trust that change. BTU, some of these stocks, again, I always say the stocks are random and unique, but let me just say a couple of things here. Again, here's a base, right? At the end of that base, here's what happens: higher lows and higher highs, right? Here you have the higher lows. Same thing happened over here. If we go back, this is the picture that I showed you a little while ago of BTU right over here. Okay. And you can kind of like see how a little bit it respected that 21-day moving average, but either way, this stock is it's a very choppy stock, but went long here, stopped out, still looks good, just needs, it's down 3 days in a row, but the buy stop is 29.33, and this stock is way too choppy. And that's way too far of a buy stop for this stock for me. TSLS, FTI. SMH eventually, if the market rolls over, this is going to be a short, right? Purple line, 200-day moving average, stalled right at that level. SPYQQQ is looking vulnerable. Eventually, this is going to be a short. We'll get to the inverse in a little bit. This one day move. Took it for $1, I think, as high as $1. Then the rest got stopped out once it broke through this low. Luckily, I sold over 50% of everything as far as the trades are concerned before the PPI number came out on Friday. CLF, again, sold some up, I think 50 cents, sold the rest at break even. And look, it just breaks down. IBB. This looks like a decent short. Now, this one, as opposed to the XBI, which is also a biotech ETF, the IBB has more of the larger cap biotech names. That's the reason why it looks better. But right over here, it looks extremely vulnerable. Right over here, 130, breaking 132.97 with a stop. Call it at this side, 136.24. I'm gonna jot this down right over here, and I'm going to see if I can find the inverse ETF for this, because it's definitely not LABU, LABU. Look, this also looks like a short. MDY, the inverse ETF for this one is SMDD. Again, this looks like a short. The hope is that they don't gap them down. TNA. IWM sitting on that 50-day moving average. I don't think that means anything at all. I think we break these lows. I think if we break these lows, they're probably going to flush them. And TQQ, same thing. 2103 on 12.8 after it goes to this high. Only gets up to 2169, not much. I mean, it was a little higher pre-mark. I think I sold some as high as 75 cents, but no follow through as of yet. XBI, look, this looks vulnerable right over here. Let's see what Lava looks like. So. Not a lot of LA, I'm sorry, LABD. That's what I meant, LABD. This is IBD 50. This looks just like the XOP, bunch of oil stocks. Gosh. This was a gut one. I mean, this just really took off. NRGD up 100 points from the buy stop right over here. This is the reason why you can't hold on to these inverse ETFs. Look at the TZA. Right? It looks completely different of what it should look like. It really does. This thing is probably flat for the year. Let's see. January 12/31 closed at 2704. We're pretty much at 3342. 6 divided by 37, that's 22%. This thing is down. IWM is down, I don't know, 20% for the year. Yeah, LABD up 7% on Friday. That's just too much for me. SQQ, again, that's on the list. Let's just hope that it just stays right around here on Monday and then it breaks through that high. This thing as well. SMDD, this is the MDY short. This is the MDY inverse ETF. I'm not concerned about the volume because again, this just trades off of the MDY, so it's fine. FAS. Same thing. This is the Dow Jones. This looks like a decent short. SDOW 2630 initial stop. Let's call it 2520. Looks like a decent short. Again, long 1453. So some on the way up, no follow through. SOXS. I think in the market, right? If let's say, for example, if I get triggered on the SPXS, SQQQ, and SDOW, I'm going to take this as well immediately. I think this is going to follow. It's going to follow the market. If those things trigger to the, if they break down, if the indices break down. So 3354, buy stop 3355, initial sell stop, call it 3140. I'm going to wrap it up there. I think we got enough. I think, listen, we have the only thing I'm going to look for is to see if there's an IBB short, the larger cap names. To see if there's an IBB inverse ETF. That's what I'm going to do. But besides that, the list will be SRPT, BCAB, SPXS, SQQQ, SDOW, SDOW, and SOXS. Now, I want you to realize that SPXS, SQQ, SDOW, SOXS, that's pretty much all one trade. I mean, that's all one trade. It's not like the S&P is going to be down and the SQQ is going to be up. That's probably not going to happen. I think it's all one trade. So when you start thinking about risk, I think you should consider all those things as one trade. I might take all of them, but I'm going to consider that as all one trade, because if you risk, let's say, for example, 0.25% of equity into each one, that's like risking 1% on one trade. So keep that in mind. Besides that, let me just go over a couple of questions here that I got in the room. Do you use an intraday trade entry with my buy stop levels? The answer is no, right? So I am not looking at intraday charts for these individual names, right? I'm looking at these things on a daily basis. Going through the high, that's exactly what I'm looking at. I'm not looking at a 5-minute chart, 10-minute chart, or a 15-minute chart. You can do that, but I'm not doing that, because I'm not going to buy something in the daily and sell it based on the intraday chart. Because again, a 5-minute cup and handle is a beautiful base on the 30-minute time frame. So no, I don't look at intraday charts for this individual trades. I am just going off the dailies, right? And the view. This is my main screen here, right? I got two screens. This is all I care about: my rolling 5-day watch list, what I'm holding on to, today's today's watch list, and then my flag items, and then I got some some stuff here. So once I put on my trades, what I do is I go to the inside day every day, but then I put it here on this scan, and what I do is I just look at the stocks that were on the previous day inside day list that are through the high, right? So maybe I missed something, right? And if I see something that I missed and it looks good, I might take it, right? So that's one of them. I do the same thing with the stocks down 3 days in a row, where I have them here. Every stock that was in the 3 days in a row is here on this list. It's there automatically, and then I just add one little scan, which is today's price is higher than the previous day high, that's our trigger, right? So I might do that. I might look at these things on an intraday basis. Then at around 2:30 for the next day, I'm going through my 4x3 scan, looking for setups for the next day, and I'm also looking at the top 400 list again, right before the market closes, right? So my orders are in for the most part before 10 o'clock, for the most part. In a good market, they're probably in before 9:45. And that's it. And the rest of the day is just a matter of, seeing what's going on and then doing some other things, right? But I'm not looking at the 5-minute chart on any of these stocks, right? And then when you get that type of question, you need to know, like, where's that question coming from? Is there a concern that a stock triggers and then it comes back down, right? If it becomes a failed breakout, that's going to happen. It's going to happen more in bad market environments, right? And if that's the case, just look for a solution, right? Maybe just buy half when it first triggers, right? And if it continues to go, at least you own some, and maybe you can buy some later. If it fails, at least it failed with you only owning half. You got to figure those things out. I try to keep the discretion out of the way as much as possible, with the understanding that, trades are random and unique. They're going to work, they're not going to work. It's just a matter it's a numbers game. All right. So do we have any questions? Anyone? All right, so remember, I'm gonna put this on the room, SRPT, BCAB. I mean, these stocks look great. These two biotech stocks, they really look good. But the market, SPXS, SQQQ, SDOW, SOXS. I think those have the best shot if they trigger, if it happens properly, where they're not gapping down. They gap down, it's over for the most part. All right, so trade them well and be well, and I'll see you guys in the room.